Sir, major event like an election is just behind us. What is your message to mutual fund distributors and investors in the current scenario?
Thanks a lot for having me here. And firstly, if you look at this whole election event, I would say if you just forget about long term, even if you just expand the time horizon and look at the markets from Friday's close, you had after Friday you had one big up day, you had one big down day, another one big up day. If you see the net result, it is barely within 1% of Friday's close. So all that the election, the exit polls and everything has done is given a lot of volatility and created a lot of noise. So all I'm saying is this is something that was obviously a part and parcel of any equity market because it gets its share of news, it feeds on news. But the longer term trend doesn't materially alter because of this. And we have just seen how Friday to Wednesday's close also, it hasn't materially changed. But having said all this, I think there are couple of things which I would like to highlight. One is that from a perspective of having a single majority government for 10 years now, we are heading into a what you would call a coalition dynamics, but the fact is it is not like the coalition dynamics of say 10-15 years back or what you had a decade and a half back, mainly because here one party is as big as the entire opposition. So it is the BJP on its own is as big as the India Alliance in terms of seats. So you have a very dominant party with a smaller cluster of much smaller parties. So the dominance of the major party will still filter through. So from that perspective, I am not worried about the election outcome. Obviously, there will be a little bit of tweaks which will happen because of the election. And also because of the verdict. See, one key thing that one has to learn is that the ruling party lost almost 90 rural seats here. So which is what may force some rethink on how we are tackling that subject. So that is all that I would say will be, and to that question I would also say, even NDA 1.0 and 2.0 were very different because NDA 1.0 was all about roads, NDA 2.0 you had so much more focus on railways. So focuses will keep changing and evolving over time. So I would say that stay put in the market since 2000. I would say there have been 32 occasions of where markets have dropped more than 5%. And I would say 75% of the occasions, what has happened is that the 1 year return after that has been in excess of 20%. What typically happens is all this is just noise, and there are very rare instances where it is the beginning of a bigger problem, like and I would say that the two negative occurrences which I've seen in this last 24 years odd would be both global related, the tech meltdown and the GFC crisis when markets fell more than 5% and then continued to hover around those levels for a long period of time. So I don't think it was anything to do with India